trading session number 7. We're going to be digesting more information on labor costs that came out today. Yesterday was the jobs openings report, and today we are looking at the ADP employment, and it's better news for motivating the Fed to lower rates, and hopefully sooner than next year. But we will see what happens with Jerome Powell and the Fed and what they decide to do next week on the Federal Reserve press conference. So let's dive in. As you can see, we have the SPY chart up. It's the 4-hour chart, 6 month, and we're going to be diving into articles I've found on CNBC regarding, the labor costs and everything. So let's dive in. Let's dive into this one first. So stocks are a little changed as investors await more labor data live updates. So I just want to go over something here, and not the whole article. U.S. stocks got rated on Wednesday as investors assessed economic data indicating inflation is falling. Really, we want labor costs down because we do not want, companies to spend money. We don't want them to raise their, prices. If they spend more money, they have to raise their prices to meet that labor. So, Dow Jones Industrial Average added 46 points, 0.1%. The S&P, NASDAQ were also little changed. The market got a morning boost after data showed a drop in labor cost, spotted positivity for path of inflation, while jump in productivity signaled the potential for economy to skirt a recession. Private payroll data from ADP offered the latest indication that job market, long considered a pain point for the Federal Reserve, was easing. So, this is pretty much going over, labor costs falling, and we want that. We do not want companies to keep spending money. I just noticed. Let's float that to the top here so I could be above all the layers. So, as Craig Earlham said, there's no getting around the fact that the data at the end of the week is the one everyone is eagerly waiting for. So we also have, the unemployment and employment data on Friday. We're waiting that. And, so far it's a good start. We got, the openings that were down. We have the ADP employment that has been down. And signs that inflation is going to be coming down, that companies and corporations are not going to be raising their rates because of payroll related stuff to their business. So let's dive in now. Let's keep going down here. Let's see here. What else? I think that's it for this article. So I'll leave this in the description below. It's pretty much the live updates of today. So if you guys want to check that out, let's look at the U.S. economic calendar. So this is pretty much what I follow. I have, this calendar behind me has all these reports. So if you guys want to know what is going on this week, in the following week, you can always look at the Market Watch calendar. Let's switch this song. All right, it's more like it. All right, so today is the 6th. Let's look at ADP employment. So that just came out 8:15 today. Previous was 106, the previous report, and it is coming lower at 103,000 employment numbers. And then yesterday we had job openings 8.7 million compared to the previous 9.4 million. So that is good for inflation coming down. So let's look at what we're waiting for. Initial jobless claims Previous is 218, and then we also are looking really at this, the U.S. employment report, and then the unemployment rate. So, and then also, hourly wages, if they're going up and down. So that is good news. Pretty much, we're waiting for Friday. We're hoping that it's more good news for the Fed to really digest the numbers of this week of the numbers on the job openings, numbers on the ADP employment, and then numbers also on Friday. Hopefully they are great numbers for them to digest on. Next, I believe if we look here, they are going to be talking on Wednesday the 13th. And you see right here, Fed Chairman Jerome Powell press conference. So you're going to see that, and we're also going to be looking at the core CPI and the core PPI. So that is also very good indication as well for inflation and stuff like that. So that is the calendar for the next week. So let's dive into now another article, another indication what the market is doing right now. So we're seeing oil really crashing right now, and $70 a barrel, closing at the lowest level since June. So as you can see here, U.S. crude declined 4% on Wednesday, with retail gasoline prices hitting the lowest point since January, ahead of the holiday shopping and travel season. The West Texas Intermediate, contract for January fell 2.94 to settle at $6.938 a barrel, while Brent contract for February declined 2.68 to $74.52. Let's see here. Prices at the pump, guys, meanwhile, have followed oil prices lower to hit $3.22 a gallon on average as of Wednesday, lowest price since January 3rd, according to AAA. U.S. crude inventories fell by 4.6 million barrels for the week, ending December 1, and gasoline supply to market increased by 260,000 barrels per day. So, guys, that is oil. Oil can be a play today. We're going to be looking at oil. So this article and the live updates article will be in the description below, as the economic calendar as well will be in the description below as well. I'll post all that. So let's dive into now the portfolio. So let's bring that over to our other screen now. So we are sitting on $6,200 right now, and we have pretty much half. We have it split in the middle. Our market value is pretty much, I think it's 51%, guys, into the market, and then we also have 49 cash. That's what we just calculated right now. We could also bring that up. So let's actually just double check here. So 3201 divided by 62, the total 77. So as you can see, 50.99. So pretty much 51% is in the market right now for Mobil Fellows portfolio, and we also have the $3,000.76 cash. So that is the update on the total balance of the account. Now we're going to be diving into what stocks are down on the day, and just to clarify, guys, this is our watch list. This pretty much determines what stocks are up on the day and what stocks are down on the day, and then we have our positions over here. So let's look at now what is currently down, what is currently up. So right now we have Block, Zoom, and PayPal really, coming back up. So we see Square making a move. Block making a move up. It's at 80 RSI. Typically, if we had a bigger position, we would be trimming right now, but we do not. Zoom, we have, 69 RSI, relative strength index, and that is located right here, our indicator here, 69. PayPal is making a move as well to overbought value at 60. So those are the top three stocks right now that are up on the day. So for the stocks that are down, we have Palantir, Shopify, and Nvidia, bottom three. Palantir really taking a hit from that renegotiation process on their contract with, I believe it's the Army contract for $458 million. One Palantir bear trader came out and said that Palantir is not expecting to, renew that contract for so much that they did before. So that is why the stock is really taking a hit. So that's down 5.35%, and as well as probably the market as well. The market can be controlling it as well. We have Shopify down, down on the day at 45, pretty much almost fair value. And then we have Nvidia down on the day, 1.77%. But we really want to look at oil, guys. So our oil stock in the portfolio is Exxon Mobil, and look at that. It is, got rejected here on the 200-day moving average, and it just keeps selling off, as we talked about on the crude oil article. And it's at a 25 RSI level on the 4-hour chart here. So we are going to look at our position in oil, Exxon Mobil here. That is only a 39.21 market value, and we have average price of 101. It's trading below that, so we want to try and lock in a better deal. But we do want to look at other stocks as well, just in case. So we're going to look at all the red stocks here, because we like to buy deals. We like to buy stocks that are down on the day, great companies that are down on the day. So we got Meta at 39. We have Apple, 57 RSI. We got Salesforce at 58. DraftKings looks pretty good. It's coming back down, trying to meet that 200-day moving average, and it is at 34 RSI right now. Google, we have looks like it's below the 200-day and is at a 41. Once that comes down to around 30 RSI, we will think about buying that. Microsoft, we got, it's above 200-day and looks like 42 RSI, so not too desirable. Amazon, 47. We got Walmart, looks like at 40. Johnson & Johnson, 52. Netflix is above the 200-day, but at 31. That looks pretty good, but we want that try to come down below that 200-day to make it a deal. So, and we're landing back on Exxon Mobil. So as you can see, oil is getting crushed here. Lowest point, and what was it? Let's see. Lowest point since June. Lowest level since June. So let's go ahead and lock in Exxon Mobil here. $10 unit size. Exxon Mobil buy, amount $10, order type market, time and force day, send it hours no, and we are order quantity 0.10093. So let's lock that in. Notification here on my phone. That is a 99. We got it at 99.05 cents. So that is what we locked Exxon Mobil in to try and bring that market value up on Exxon Mobil here. So that is that, and let's look at our top stocks here, see if we want to trim any. So as you can see, Apple 57, Tesla 56, Amazon 46. Sorry, I'm not even looking at Open P&L, so let's go start over. Nvidia 40, not enough. Meta, not enough. Tesla, not enough. RSI, we need around 70 or above, guys. We're looking for. Yeah, so it looks like no trims for today. So we really want to try and trim the Nvidia and Meta. Looks like we have a 128% and 111% return on investment on those two stocks. So we are waiting patiently for those two stocks to try and get up above 70 RSI relative strength index. It's pretty much one of the main indicators we use, as well as 200-day moving average and the 50-day moving average. So let's go to SPY here. Let's go to the 1 day, 1 minute chart. As you can see, it is selling off, guys. Selling off, and it keeps diving. So, creating more deals. We like it. We got a lot of cash, on the sidelines, and we just want to keep unloading into this market when people are selling off. We want to keep unloading, buy when others are fearful and sell when people are greedy, pretty much. So, that is the account. That was our buy, Exxon Mobil. We had to take advantage of the oil coming down, so we are going to wait patiently for that to come back up, and we might even buy some more oil. We want to build a great position in oil. So that is today's trading session. We're awaiting more labor news on Friday. With the unemployment and employment rate and stuff like that, hourly wages, and so and then we're also looking at the PPI and the CPI report next week, along with Jerome Powell speaking on the 13th. So that is today's trading session. I hope you guys have a wonderful day. Hit the outro.